Hello, my awesome accounting students. Glad you're back and ready to tackle Chapter 15. Chapter 15 is on the first of several major cost accumulation systems. Just a reminder that all the files for the lectures and for the class are located in the modules link. On the screen, you'll see the agenda for day 1 of Chapter 15. We're going to start off by talking about cost accumulation systems. First, we'll take a look at job order costing, which is the topic of this chapter. Job order costing is used for customized types of jobs. We'll take a look at several PowerPoint slides that'll give you characteristics of both. We'll talk a little bit about process costing, which is the second type of cost accumulation system that we'll cover in the next chapter. And honestly, most manufacturing environments that I've been in are kind of a hybrid of both. So today we'll be talking about both of those. We'll take a look at the characteristics and talk about how they are the same and how they are different. But our focus today is going to be on job order costing. And just as we did in Chapter 14, we're going to watch how the costs move through the balance sheet and eventually make it to the income statement. I have some good news for you, at least I hope it's good news. If you invested the time in Chapter 14, as I suggested, using a T-account approach, then this chapter and Chapter 16 won't give you too many problems at all. So we're going to continue our focus on T accounts, and that will make the journal entry process much easier for you if you invested the time. So remember, there's 3 types of product cost. And so accordingly, we're going to take a look at all 3 costs and how they move their way through the accounting system in a job order manufacturing environment. So we'll take a look first at materials. Okay, think about that materials account. We saw purchases of materials coming in, and we saw how the use of direct materials in the previous chapter was charged to WIP. In this chapter, not only are we going to talk about direct materials, but we're also going to add a little bit of complexity and talk about indirect materials. Those materials that aren't necessarily charged to a specific job, but may be charged out to the factory in general. Then we'll take a look at labor and how the manufacturing payroll costs are charged out. That's going to include both direct labor and indirect labor. And finally, probably the toughest of the 3, we'll take a little bit more in-depth view of factory overhead. Specifically, we'll look at the actual overhead, which is recorded on the debit side of the T account. And we'll take a deeper look into how overhead is applied out to WIP. In the previous chapter, we just added all of the actual overhead and charged out the whole thing. But in actuality, overhead needs to be applied as the jobs move through the accounting system. So we'll talk about the process for doing that. And we talked a little bit about that factory overhead account in Chapter 14. Now we're going to see some more, again, a level of complexity come up in that our overhead debits and credits are usually not going to be equal. And so we'll talk about what do we do with over-applied or under-applied factory overhead. And then finally, we'll tackle the journal entries from birth to death of a job. Again, the good news is if you took a look at this information in Chapter 14 and you spent the time talking about a T account approach, the journal entries for you are going to be much, much easier. Let's get started. Let's jump into the PowerPoint slides. Remember, everything you need is located in the modules link. We're talking about job order costing in chapter 15. You can take a look at the learning objectives. I would use this slide and review it prior to a test to make sure that you can do all of those various objectives. Use it as a checkoff list. I think that's a great idea. So let's explain job order costing and job order cost sheets. Process costing is chapter 16. What we're speaking about in this chapter is job order costing. The author did kind of a funny thing here. He put the job order costing visual on the right-hand side of your screen, but he put the characteristics on the left-hand side, which is kind of confusing. So make sure you take note of that. We're looking at a job order cost environment. Job order costing involves custom orders. That means that the products tend to look differently from one another. That means that the products and services are usually of a diverse nature. Because the products are custom, there tends to be low production volume and high product flexibility. And again, because the jobs or the products are different in how they look at the finish line, there is low standardization in job order operations. Process costing, on the other hand, is covered in chapter 16 and involves repetitive procedures where the end units look similar, if not identical, to each other. So a process costing operation might be the Shell oil that you see off the 405 freeway. All the gasoline at the end of the production process looks the same. So that tends to have high production volume. Some of these factories, like Shell oil, crank out production 23 to 24 hours a day. There's low product flexibility because all gasoline is pretty much the same, and a high level of standardization. This is a good slide to review on how process costing and job order costing vary. They are similar in many ways, but they also have some differences that you need to be aware of. Production activities in job order costing involve the same three types of costs that we talked about in chapter 14. Here's where the investment of time into the T account system of learning is really going to pay benefits for you. So if you invested the time in chapter 14 to track the cost of the products from birth until death, the journal entries in this chapter are going to come much easier for you. Manufacturing cost flows that we'll be studying. Again, we'll take a look at the same inventory accounts that we took a look at in chapter 14, and we will watch the costs run through the balance sheet, eventually winding up in cost of goods sold. We'll take a look at the raw materials inventory. We'll talk about how the direct and indirect materials are charged out. We'll take a look at the largest asset account for most manufacturers, called WIP. We'll see how each job that is being produced will go through the factory and move from the balance sheet, eventually winding up on the income statement in cost of goods sold. As the goods are finished, they are taken out of WIP and into finished goods inventory. And finally, as the goods are sold to the customer, they'll make their crossover from the balance sheet into the cost of goods sold on the income statement. We'll learn about the subsidiary records, which are used to support all four of these different line items. take a look at this job order cost sheet. Again, it's hard to see it on the screen, so go take a look at those PowerPoints in the modules link and take a moment to study the job cost sheet. We'll be using some job cost sheets today in our exercises and our problems. I want you to notice that there are 3 types of costs on here: the direct materials, the direct labor, and the overhead. You're going to see how each one of these 3 product costs are charged out today. And we're going to take a look and record the flow of costs in the job order costing system from birth until death. The materials costs come in the form of materials requisitions for the items coming in. And then we'll take a look at how the materials are used up in the production process. We'll take a look at materials ledger cards, which control the materials coming in and out. And we'll see how materials are charged either to WIP if they go to a specific job, or to factory overhead if the materials are being used for general factory use. Here's an example of a materials ledger card. So think about the raw materials arriving at the back of the dock of the company who's making the product. Raw materials is going up. So when raw materials come in, the raw materials account is debited to increase the asset, and the liability also goes up unless they're paying cash. Most companies pay via accounts payable. The materials are requisitioned either to specific jobs, in which case they will be charged to WIP, or just to the general factory, in which case they would be charged to factory overhead. The materials requisition journal entry, that's a fancy word. That means materials are being requested to be used in the factory, in this case, on a specific job. That would get charged to WIP. So WIP goes up, materials goes down, just like we saw in the Chapter 14T accounts. We will be working on these cost flows today. And now let's take a look at how labor costs come in. You'll notice that the labor costs are supported by the assembly line workers' time tickets. Each assembly worker clocks in and out and charges their time to one of 2 places, either to a specific job if they are on the assembly line, or to factory overhead if they are supervisory labor or possibly salaried workers who work in a non-manufacturing capacity. Here's an example of time tickets. If you take a look at that, you can see that each worker clocks in and out. On that time ticket, you'll see the total hours charged on each day. You'll notice that in this case, there's 3 specific jobs that the time was charged to. So when that happens, you'll see a journal entry to debit the WIP for the assembly line workers' time, and a credit to the liability account called factory wages payable. The last type of cost that we'll talk about is the overhead costs. By the way, these tend to be the most difficult for students to understand, so I would pay particular attention to these slides. Overhead costs are, by their very nature, indirect product costs. That means you can't physically trace them to specific jobs. So what needs to happen is during the manufacturing period, the overhead needs to be charged out to each of the individual jobs that are being worked on. Okay, keep in mind what our factory overhead account looked like in Chapter 14. We had the actual costs accumulating on the debit side, And then for simplicity purposes, we made one credit at the end of the month, transferring all the overhead costs out to WIP. Okay, well now we're getting into a more realistic example of how overhead's charged out. We don't wait until the month and simply add up the overhead costs. We need a mechanism to charge out the overhead to the jobs as they are making their way through the factory. We do that through the use of a predetermined overhead rate. By the way, we will be spending more time on overhead costs in day 2, but we will touch them today. A predetermined overhead rate is a really fancy word for an overhead rate created ahead of time. So at the start of the year, the factory estimates its overhead costs, and that's what goes on the numerator. And they'll also estimate their activity for the year based on a specific basis for charging it out. Most companies use direct labor hours or direct labor costs. However, depending on the nature of the company, they could use any number of things. For example, Hertz may use miles as an estimated activity. Kinko's might use the number of copies as their activity basis. So however the company decides to charge their overhead out, that would go as the denominator or basis in this predetermined overhead rate calculation. Based on the amount of this predetermined overhead rate, overhead will be charged out to the actual jobs in what we call applying the overhead. You'll see an example of that momentarily. So here's an example that I was referring to. This company called Road Warriors uses a predetermined overhead rate. This means that at the start of the year, they calculated out what their overhead rate charge would be for each job. And they took the total overhead costs on the top and divided by some type of a basis on the bottom. In this example, they estimated their overhead to be $200,000. They estimated their basis to be direct labor dollars in this case. So when you take 200,000 and you divide by 125,000, they came out with a rate of 160% of direct labor costs. As the jobs make their way through the factory, they will not only receive direct material and direct labor costs, as we saw previously, now they'll also be charged an overhead rate, in this case using a rate of 160% of whatever the direct labor costs were. So in this example, we saw direct labor costs of $4,200. We multiplied that by the rate of 160%. And as the job makes its way through the cost accounting system, it will get charged the overhead. How is that overhead going to be charged out? By a debit to WIP and a credit to the factory overhead account. We call this relieving the factory overhead account. So let's back up. Actual costs go on the debit side of the overhead account. Applied costs go on the credit side of the overhead account. If we're 100% perfect, and we never are, the debits will equal the credits in that dummy factory overhead account. However, perfection never happens, so chances are there's going to be some type of a balance in that overhead account. We'll learn how to allocate that balance at the end of the period. So now let's talk about recording actual overhead costs. Thinking of the T account from chapter 14, that would be charges or debits to the factory overhead account. So anytime an actual overhead cost was incurred, we would be debiting factory overhead. In this slide, you'll see that that's what we did with indirect materials, indirect labor, and any other type of overhead costs. So in this example, indirect materials are being charged out to the factory. Remember, if the materials were requisitioned on a specific job, we debited WIP. However, if it's not directly traceable to a job, then it just gets charged as a factory overhead cost. So in this case, indirect materials are being requisitioned to the general factory. Factory overhead gets debited, the raw materials inventory goes down with the credit. We'll be practicing these journal entries today. Here's an example of some indirect labor. Perhaps think of a supervisor in the factory. His or her time is charged to the factory overhead account as an indirect cost and charged to wages payable. In this example, this is kind of what we call a catch-all charge of actual overhead costs that were incurred. Actual costs are charged to factory overhead via a debit. And in this case, looking at the various credits, this is probably factory overhead depreciation. This is probably the factory rent that's due. This is probably the factory utilities that are due. And this is some type of a prepaid charge for some type of prepaid related to the factory. Keep in mind that all these are what we consider actual costs. That's why they go as a debit to factory overhead. And here, if you studied the T accounts with me in chapter 14, this will look very familiar to you. We're taking a look at how the costs transfer from their birth in raw materials inventory to their death, eventually in costs of goods sold. So this looks like it's specifically related to materials. Two things happen to materials. They come in via a debit and they go out via a credit. Materials can go one of two places. In this case, these are materials directly charged to a job. So you would debit WIP and credit the raw materials inventory. And as it makes its way through the system, when the job is completed, it'll be taken out of WIP and be charged to finished goods where it will sit. And whenever that job or the product is sold, it'll come out of finished goods and meet its final resting place here on cost of goods sold. I think that you should take the time. I would spend 10 to 15 minutes on this slide in the PowerPoint presentation, making sure that you understand where all the various numbered line items are coming from and where they're going to. Rather than spend our time on this slide, we're now ready to jump into our exercises and problems and get started. The Excel files are all located in the modules link of your Canvas course. Let's read this exercise together and fill out this all-important job cost sheet. It says the following information is from the materials requisition and time tickets for a particular job completed by Great Bay Boats. The materials requisition start with the letter M, and the time tickets start with the letter T. Estimated overhead is $1,400. Prepare a job cost sheet for job number 9, which includes costs for direct materials, direct labor, overhead, and total cost. Okay, notice the two M documents. Those stand for materials requisitions. So the first thing I'm going to do is put the materials requisitioned in the direct materials, shown in yellow here. I'll put the time tickets in the direct labor area, shown as a light orange here. And I'll do the standard one-time charge of $1,400 on the overhead account on the far right-hand side of the job ticket. Pause the video. I'm going to complete the time card, and you can come back in and compare your answers. Let's compare our answer. The direct materials resulted in charges of $2,250. The direct labor time tickets resulted in charges of $1,350. And the overhead was given as a straight $1,400. When you add up the job cost sheet charges, or another way of saying it is if you sum up the direct materials, the direct labor, and the overhead, we wind up with a total cost of the job of $5,000. Let's read the next problem together. This problem also deals with interpreting job cost sheets. So they give us 3 different jobs in various stages of production. They let us know that these job sheets are as of the end of June for a custom patio manufacturer. And if we keep reading, it says all the jobs were started in June. Okay, that means that there was no beginning WIP. These were started, and in a moment we'll read about the status of the job. They tell us that overhead is applied with a predetermined rate based upon direct labor cost. We'll have to look at the job cards and see if you can determine what that rate is. And they tell us that jobs 102 and 103 were finished in June, but job 104 was not yet completed. It will be completed next month. So take a moment to jot that information down, and we are asked to compute 3 things. Number 1, what was the total cost of the direct materials requisitioned in June? Number 2, how much was the direct labor cost incurred in June? And then number 3 will ask us how much total cost is transferred to finished goods. Finished goods transfers happen when the items are completed. Since only the first 2 jobs were completed, we'll add up the job cards for job numbers 102 and 103 to come up with the answer to that. So take a moment, read through the problem, see if you can come up with the same answers that I'm going to display in a moment. Pause the video and let's see if our answers match. Okay, let's compare answers. Number 1 asked for the direct materials requisitioned in June. You can see by the job cards that we summed up the direct materials from all 3 jobs. 15,000 plus 33,000 plus 27,000 gave us a total of 75,000 of direct materials requisitioned. Number 2 asked us for the direct labor cost incurred in June. We would look at the second item on all 3 job cards and add those jobs up. In this case, 8,000 plus 14,200 plus 21,000 gave us a total direct labor cost of 43,200. And finally, probably the trickier out of the 3 questions, was what amount was transferred to finished goods inventory. Once again, in order for something to be transferred to finished goods, that means the job must be completed. The author told us that only 2 out of the 3 jobs were completed, and that was jobs 102 and 103. So we took the costs on those two jobs, added them up, and then came up with a total of $81,300 of work that was completed, and so that would have been transferred out of WIP and into finished goods. I would have asked you one more question had you asked me to write the problem. I would have asked you question number 4, how much remains in WIP? And that would have been the total of the one outstanding job that's not yet finished. And to get those answers, or to get that answer, I would total up that last job card. Let's start our most comprehensive exercise of the day. Our focus is going to be on tracking the costs from birth until death, while at the same time maintaining job cost sheets for each one of the job. Because this exercise is fairly long, let's break this up into a few different steps. I'm going to read the first 3 letters with you, and then we will do 2 things. We'll record them in T accounts as well as update the job cost sheets. So this will ensure that you have a good understanding about how the costs move through the accounting system using a job order costing environment. Letter A, purchased $100,000 of raw materials on account. I want you to think about that. What's going on in the T accounts? Raw materials is going to go up, and since they were purchased on credit, accounts payable will go up. Letter B, material requisitions. Okay, stop. What does that mean? Material requisitions means that materials are coming out of raw materials and going one of 2 places. If they are charged to a direct job, they will come out of the materials account and they will be charged to WIP. If instead of going to jobs, they're going to the factory in general, they will be considered an indirect material cost and will charge the cost to overhead. So for letter B, I want you to use the appropriate T accounts and also update the job cost sheets. And finally, letter C is the time tickets for the labor used for the month. If a job uses assembly labor or dirty touch hand labor, then the correct charge would be to WIP. If, however, the labor is indirect in nature, that means it's not benefiting a specific job, we'll charge the indirect labor to factory overhead. Pause the video and run transactions A, B, and C through the accounting system, as well as enter the information onto the job cost sheets. We'll compare answers. Let's go over the answers for letters A, B, and C. And actually, I also did D, so I'll give you a minute or 2 to compute letter D as well. Letter A dealt with the materials coming in. Letter A says we purchased raw materials on account. In your T accounts, I should see a debit to raw materials because the raw materials account is going up, and a credit to accounts payable. Now, this set of T accounts is basically for a job order costing system. I'm not so concerned about these other balance sheet accounts, but again, to make sure that we have this double entry accounting going on, anything outside of the manufacturing accounts we can just place in this other accounts. you'll see my credit to 100,000, and I notated that that was for accounts payable. So we have the raw materials coming in. Let's go back and take a look at letter B. Letter B deals with materials being requisitioned out to both jobs as well as to the general factory. So what you should have done on letter 2 is you should have updated the job cost sheets for the materials of 48,200 and 23,600, and off to the right you'll see that my total sum of direct materials used was 71,800. When direct materials are charged to jobs, they come out of the materials account and they are charged directly to WIP. So let me go show you that movement down here. They came out of materials and they got charged to WIP. The indirect materials, those for general factory use, also come out of raw materials, but since they're indirect, that represents a factory overhead cost. So let me go down to my overhead account. There you'll see letter B, the indirect materials that were charged to the general factory. Okay, let's go take a look then at our labor costs in letter C. Letter C dealt with time charged directly to jobs through the source document time tickets. So update your 2 job cards for the direct labor costs of 39,200 and 12,600. When you total it up, you'll get 51,800 in direct labor used. The direct labor is charged to WIP, and the credit would go to factory payroll payable or wages payable or something of that nature. That's down towards the bottom. So what you see here is the direct labor charged to WIP. The indirect labor, the factory labor, the labor that was done in the factory but wasn't directly traceable to any jobs, is a factory overhead account, as we learned. Indirect labor is a general indirect factory overhead, so that's where the debit lands there. And the 2 of those added together would go to some type of a factory payroll or a wages payable account. So now let's try letters D, E, and F. Letter D will have us applying overhead. The key word there is applied overhead to both jobs 201 and 202 using a predetermined overhead rate of 80% of direct materials. Pay attention to that one. Direct materials is not a common basis for applying overhead, but companies can choose anything that they choose to charge out their overhead, and this company has chosen direct materials as the basis, and the rate that they gave us is 80%. So go ahead and apply the overhead. Don't forget to update both the job cost sheets as well as the T accounts. Letter E says we transferred job 201 to finished goods inventory. That must mean that that specific job is completed. So do the correct movement of the costs out of WIP and to finished goods. And then letter F says that that job that was finished was also sold. Notice on letter F, they give you 2 amounts. One is the revenue that needs to be recorded for the job, And the second one is the cost of goods sold, which they leave up to you to compute. So try letters D, E, and F, and we'll compare our answers. Let's see how you did. Letter D, applied overhead to WIP based on the rate of 80% of direct materials cost. Make sure you updated the job card appropriately, and then you should have charged the factory overhead to WIP. That means you should debit WIP and credit the factory overhead account. Okay, so check that out and make sure that letter D was done correctly. Letter E transferred the cost of the finished job, job 201. That means you should have taken the cost out of WIP and charged it into finished goods. That's what happens when a job is completed. That brings us to letter F, which has two parts to it. That same job, job 201, was sold for $163,760. There's two parts to this journal entry. You need to record the revenue as well as the expense of that job. The revenue should have been debited to accounts receivable. So for our purposes, we can just put it in this other balance sheet account, notating that it would be accounts receivable. And the credit would have been recorded as sales. The second part of that journal entry is the transfer of cost out of finished goods and into cost of goods sold. Once the job has hit cost of goods sold, the cost is now dead. For the last part of this exercise, go ahead and try to record the actual overhead costs for the month. They give you 5 line items here, 4 specific charges and a total. See if you can correctly record the actual overhead so we can wrap this problem up. Let's take a look at the answer to transaction G. Incurred the following actual other overhead costs. So the word actual tells you that we're on the debit side of the factory overhead account. The credits would go to individual accounts in the general ledger having to do with the items mentioned. For example, the $32,000 of depreciation would get credited to accumulated depreciation. Again, in the interest of saving space and time, we're just putting it to this other balance sheet account, but the credit would actually be to accumulated depreciation. The rent on the factory building would go to either accounts payable or more specifically factory's utilities payable. The money is owed. The expired factory insurance, since it says expired, it most likely came out of a prepaid insurance account. So take a moment to review the one debit for the total of the actual overhead costs incurred. And the credits would go to a variety of accounts depending on the type of costs incurred. We'll take a look at the actual journal entries momentarily. The last requirement of this exercise before moving to the journal entries was that you compute the gross profit on the one job that was sold. So on the screen, you'll see the gross profit computed as the difference between the retail sales value and the cost of goods sold that was recorded on the job card. Gross profit is shown in dollars, as well as I wanted to refresh your memory, even though it wasn't asked for, I want you to remember how to compute the gross profit percentage. And the way that you do that is you take the gross profit, in this case 37,800, divided by the sales. And when I let the computer compute that for me, it's about 23.1%. Okay, that's a low gross profit margin. Most likely, if this company were in the United States, it would not be profitable on the bottom line. But when we do calculate gross profit numbers, I would like to see you take it one extra step. Again, I know what's around the corner, and go ahead and compute that as a percentage as well. On to the journal entries. Let's finally wrap up this very long problem by taking a look at the journal entries and T account balances. 15-7 asks you to prepare journal entries to record the transactions in items A through G. The good news is we've already done the T accounts, and if you understand how the costs flow from birth to death, as practiced in the last 2 chapters now, the journal entries should not be that big of a deal. Refer to your T accounts to see how the numbers are generated. Let me scroll up. For the raw material journal entries, remember, raw materials have 2 things basically happening to them. They come in, which you'll notice we computed and calculated on the T accounts in transaction A, and they get requisitioned out. Transaction B shows the direct materials that got charged directly to WIP, and the second part of letter B shows the indirect materials that were charged for general factory use. Further scrolling up, let's take a look at the labor journal entries. The first part of letter C records the direct labor, or the dirty hands or touch labor, based on the time tickets. And the second part of letter C shows the indirect labor charged for general factory labor. Let me scroll up. Letter D shows the applied overhead. We learned back on the T accounts that the actual overhead comes in on the debit side of the overhead account, and the applied overhead comes out on the credit side. So looking at letter D, the overhead was relieved in the dummy factory overhead account and charged directly to WIP. Letters E and F record the jobs completed and sold. Letter E shows the transfer of the costs out of WIP and into finished goods when the job is completed. And letter F shows the revenue as well as the cost of the one job that was sold. Take a moment to look those over, pause the video, and consider tying those items back to the T accounts. And let's finish looking at the solution together. Letter G shows the other factory overhead costs incurred. And then finally, exercise 15-8 asked you to show the T account balances. Now, the easiest thing to do would just go back and foot our T account balances that we did in class, or so that you have the answers all in one place, I went ahead and used the solutions guide to show you the various T account balances that had an actual balance in them. So on the screen, you'll see balances for raw materials inventory, for WIP. Remember that ending balance in WIP relates to the unfinished goods in the factory. You'll see the factory overhead dummy account summarized. That account floats from month to month. However, when we get to year end, it needs to be closed out. and we will cover how to do that in our second half of the lecture. Finished goods has a zero balance because the one job that was finished was also sold, so there does not remain any finished jobs. And finally, the cost of goods sold has to do with the one job that not only was finished, but it was also sold. One last quick note, that other column is just a recap or summary of other balance sheet accounts, and so there was no need to foot that one since that wouldn't make too much sense. Those would all be in separate balance sheet accounts and would be summarized through the financial statement process. That's a lot to cover in one day. This may be a video that you choose to watch more than once. Again, we're learning about foundational concepts that are going to carry us to a successful completion of the class. Thanks for watching. Professor Johnson signing out.